Everybody. Hi, good morning. Hello. I just wanted to uh, keep you up to date again. I was out last week. I had some business to take care of, and so I didn't get a chance to answer any of your emails. I'll be doing that this week uh, as I have the time. And then we're coming towards the end of the semester. So December 1st, your papers are due. Today is November the 10th, according to my calendar, and you should all be still following your stock. We're going to be talking about the stock market again today, as well as your final paper. Your final paper is 5 pages long, typed. I've said this before. It's in your assignments in Brightspace. It explains what the five parts are. You can really, some of them are just a paragraph long, some of them are full page or a page and a half. It should be typed, double spaced. You should have your name on it and the name of the business that you're starting. The business should be, and I kind of repeat this over and over, it should be a real business, a business that you could actually start while you're in college, something that's actually feasible, and something that you like, something that you actually want to do as a business, something that you enjoy, something that's part of you. And That's the only way a business will be fairly successful is if you enjoy it. Now, there are many people who hate their jobs and hate their businesses and hate the careers they've gone into. There's no doubt about that, and that's part of business. Sometimes you don't get the job or the type of business that you thought you were going to be in when you started out, when you were younger. But the best thing in life is to find something that you really enjoy doing, that gives you satisfaction, that makes you feel internally, it makes you feel good. It makes you feel that you've accomplished something, and that's important. I think a business, like anything in life, it's important to find the right fit, just like it is important to find the right partner in life. It's important to find the right friends in life. You can't really find your family, but it's important to your family is who you are with, but it's important that you have a good fit for yourself, something that you think you're good at, that perhaps others think you're good at, that you may not even know about. A lot of times, a lot of people are unaware of their positives as well as their negatives, but their positives, and other people need to point them out. Like some people may say, "Well, I think you would make a great, doctor," or "I think you would make a great lawyer," or "I would think you would make a great, um, you know, sanitation man," or "I think you make a great fireman," or whatever it is, so firewoman. It may take another person to point out what your strengths are, and they give you their reasons why they feel you would make this type of career. Or somebody would say, "I think you'd make a great entrepreneur. I think you should go into business. I think that business should be your strength, and I think if business is your strength or not." And that's part of the fundamentals of business. You should kind of say to yourself, do I enjoy business? Some people don't. Some people don't want to be in business. As I said before, there's nothing wrong with that. That's perfectly fine and legitimate in life. Some people like math. Some people don't like math. Some people like English. Some people don't like English. Some people like to sing. Some people hate the sound of singing. Everybody has their own life and their own way to lead it. I'm offering you a path with business because I think business is important to so many different facets of your life. So let's get back to what I think is very important, which is a study of the stock market, and especially when it comes to corporations. It's going to be very, very important if you're going to be investing. That now a lot of people are blind investors. They're the ones who just put their money into their 401k and have an investment advisor, or just put it into a mutual fund. Now, just for an explanation again, what a mutual fund is. A mutual fund is a collection of different stocks that are chosen by usually analysts for different companies, different investment companies, and these analysts will look at what stocks they feel will do well, over the long term, the short term, and they buy huge amounts of that stock, and then they bundle them all together in a what's called a mutual fund. Now they buy and sell stock in that mutual fund all the time. Not like we buy and sell stock, but they buy and sell stock, hundreds of thousands of shares of stock. And they have these financial analysts who sit and study what stocks they feel are going to do well. And they look for what's called a balanced portfolio, which is a balanced mutual fund that gives, stocks that are, somewhat risky, and then there are stocks that are somewhat not. And you can buy different types of mutual funds. There are riskier mutual funds that have stocks that are not as established, and then there are those that are like, what are called blue chip mutual funds, which are very established companies that have been around, for 50 or 60 years, and hopefully will be around 50 or 60 years from now. And the names, they're very popular names, and those are the companies that, usually if you invest in them, they'll be around. But honest to God, so many companies disappear over time. They come, they go, they get bought up, they change their names, they change their focus. I'm always fascinated how these companies come and go that trade publicly. There were big names, like the big names in the stock market when I was young are no longer the big names in the stock market today. Things have changed, obviously. The internet changed things, and computers and cell phones and so forth, and AI and high tech, and Silicon Valley has changed things very much in the world. And they've changed the way companies that were once, major, huge, massive companies that dealt with electronics and dealt with, advancement in the future have virtually disappeared, or their names still exist, but they're not the same companies that they were, 40, 50 years ago when I was younger and investing. I first started investing when I was in college. So a lot of the companies that you see today will either be here or not be here, or may have morphed into something else by the time you are an adult like myself. You will have, in your 60s and your 70s, you'll look back at some of the companies that you owned when you were in your 20s, and you'll say to yourself, wow, why did I ever buy that company? They're not even around. Like, I'll give you an example. I bought, when I was younger, there was a company called Polaroid, which was, I think still may exist to this day, but is not quite the same company that it once was. And it would do something that was, at least for my time when I was young, pretty advanced, which was, and you see them still, they still make cameras, Polaroid cameras. I don't know who owns them necessarily, if they're still owned by Polaroid or somebody bought the name. But those were cameras where they would actually have instant development. There was a chemical at the bottom in a package, and when the film came out of the camera, there would be a way of mixing the chemical to develop the picture. In those days, all photos had to be developed. They were not on your phone. They were from cameras, and there was literally film that had to be developed. Well, Polaroid came up with a way of developing your film instantly. Now, this had been around for a long time. This had been around since 1920s, but they came up with these very. In other words, you could develop a picture. There was a way of developing a picture in the camera even earlier than Polaroid had come up with it. But Polaroid came up with this, what was called land camera. And it was very innovative for its time, and people loved taking Polaroids. And I said, ooh, this is a great company. Let me buy into Polaroid. And for a while, my stock, did okay. Polaroid was still a very big company, and people still bought Polaroids, and it was a happening company. And I was holding the stock for a while. I didn't have a lot in those days. I mean, I think I had like 10 shares of Polaroid. But still, what it did was it gave me an idea of what happens when a company kind of gets innovated out. It really, what happens is that new companies come along with different ideas, and technology changes, and people really did stop using, although there are still cameras, and people use cameras, and people still buy film, and people still use Polaroids as kind of a nostalgia or for parties or things like that. Really, the cell phone has taken over the world of cameras. And most photos are taken on cell phones, and people could share the photos, and people can, do things with the photos and put filters on the photos and make TikToks up with their photos, or they can make movies, they could do all kinds of things. They don't need a camera that prints out a picture, even though that's a nice thing to have that permanent picture. But Polaroids also are not so great in that they don't really retain the original brilliance of the photo. They kind of fade with time. And so, like everything else, like memory, kind of fades with time. The picture kind of fades with time. So what happened with my stock, to make it less interesting than the story already is that my stock plunged. What was once, I think, trading at like $40, $50, $60 dropped to $12, $11. And I lost money on it. And not that it was a lot of money, and not that it hurt me, because other stocks did well and some stocks lose and some stocks, but I held it much too long. I wasn't really paying attention to what was going on in the world and what happened with Polaroid and where Polaroid was going. I wasn't paying attention to the press, and that's what I need you to do. With the stock that you've chosen, I need you to send me, most of you still have not, and that's going to reflect in your grade. You need to send me a little bit of a description of the stock that you have. Just tell me a little bit about it. Tell me what the company does, who the company is, where they're located, how much they're worth, maybe who the CEO is, what their future plans are, in maybe a paragraph or two. Okay? Just email it to me. Okay? Email it to me. I need that as just part of your whole process for understanding business. And so just go to Google. This is what I'm going to tell you how to do it. Go to Google, type in the name of your company, type in the stock of your company. Let's say you're Apple, so you put Apple stock. Give me the information. Look at the news section. Tell me what Apple is doing right now. Tell me what future plans Apple has. Tell me who the CEO of Apple is today. Tell me a little bit about the history of Apple. Not too much. 3 paragraphs. 1, 2, 3 paragraphs. It's not a lot. Just get it to me with your name on it, so I have it. So I have it in my email, so I know that you've actually looked into your stock, and that you can say, hey, Professor Goldstein kind of forced me, twisted my arm, and I had to look into the stock that he... tell me how much it costs. Tell me how much your stock costs. Tell me why you chose the stock. Tell me anything you can about the stock. Tell me what it is that excites you about the stock. Like I just told you about Polaroid. Tell me a little bit about your stock. What do you like bicycles? Is that why you bought a bicycle stock? Do you like soft drinks? Is that why you bought a soft drink stock? You looked at a soft drink stock. Do you like potato chips? Is that why you bought a potato chip stock? Yesterday I was sitting in my famous cigar lounge with some other business people, actually some other businessmen, and we were talking about, what company was it? We were talking about a company that just got bought up by a private company and has lost so much money. In other words, I'm trying to remember what it was. I want to say it's an ice cream, but it wasn't an ice cream. It may have been something else, and I can't remember what it was. It'll come to me. But it got bought up by this company that I had never heard of before. Never heard of. Hey, you're a business professor. You know everything. You know all these companies. No, I didn't know this company at all. It's a German conglomerate, a private company. That's why I don't know too much about it, because it's a private corporation, meaning that it doesn't sell its stock to the public. It keeps its stock within itself. And the only people that own stock are the owners of the company. So they are a small a small grouping of people that own it, but the company is worth $50 billion. It's a massive, massive company. And so they had bought this other company, which was a name brand, which I still can't remember what it was. They bought this name brand. I was going to say, was it a coffee company or a food company? Something like that. They're very much into. They started out as this company that bought it started out as an insurance company in Germany, and then expanded and bought lots of food companies and companies that you would know. I am trying to remember some of the names, but they were big companies, and they built themselves up into a mega huge corporation that's worth $50 billion. But so what was the story? So my friend who's in business was saying, wow, they bought this company for $2 billion, the company that they bought, which was a major company and a major amount of money. They bought it for $2 billion. And then now the company is worth $600 million. In other words, they bought this company and they bought it for $2 billion, and now the company is now only worth $600 million. So I said to him, if you think about it, they probably only bought the company they used stock to buy the other company. In other words, they didn't pay all cash for the other company, $2 billion. They offered them stock in their company. I said, well, that's not bad. So they just offered them, ownership in their company. And I said, well, so it's down to $600 million, so they lost $1 billion. They write it off. It's a $50 billion company. It's a loss. It's a terrible loss. But it's not, it doesn't sound like it's going to destroy this huge company that's still buying things. And I said the other thing is they may turn that company around. They may eventually build that company back up, or they just may sell it, or they may let it die. Or they just may keep it or maybe they didn't see it as a $2 billion company. Maybe they saw it as a $600 million company. I don't know. All kinds of things go on with corporations and companies. They're always looking to expand. They're always looking to make more money for their stockholders. But in this case, they don't really need to make more money for the stockholders because they are their stockholders. But most public companies are very concerned with the price of their stock. That's why stocks are such great investments, because there are so many people that are working on a daily basis to increase the value of your stock. So you're actually purchasing. What's amazing about the stock market and what you're going to be doing with the stock and looking into the stock is that you're giving. Obviously, you worked hard for your money, and your money is very important to you. But you're handing over your money. You're purchasing a piece of this corporation, a small piece, but you own. You're now an owner of the corporation, and you don't work anymore. You're not working. They're the ones that are now working for you. When you purchase a stock in a company, the people at that company, although they may not be aware of you at all, and they don't take orders from you, but they do sort of take orders from you. You have a vote on who gets to be the leadership of that company, like you would have a vote in the United States government. It's not a very effective vote if you don't own a lot of shares of stock, but unlike with the U.S., maybe the U.S. would work better if it was a corporation. Unlike the U.S., you can buy more and more stock in an individual company and have more and more say in that company the more stock you own. Now, I'm not talking about us, like you and me, the small shareholders. I'm talking about the guys who are very, very wealthy, the men and women who are wealthy, who could buy large shares of corporations and then have influence over the decisions that corporation makes. Who they get to who they choose as their CEO, who they choose as their CFO, what direction the company is going into, what kind of products the company is going to be making, if the company is heading in the right direction or not. A lot of them don't want to be involved in that, but sometimes they feel for their own sake and for the sake of their money that they have to have that kind of influence in companies. And a lot of these guys will come in and they say, well, this company looks fat. It's a fat company. It's got too many employees. It's spending money in ridiculous types of projects and ideas. Well, if I go in and I thought that was my wife, Michelle, have a great day. So if I go in and I buy stock in that company, I have a lot of money, and I can go in and buy 20% of a company, or 15% of a company, or 10% of a company, and then have a voice at that company, and have a lot of votes at that company, and I can sway people to vote with me. Then I can change the direction of that company by getting rid of the fat. What I mean is laying off people, firing people, getting rid of divisions that aren't being profitable, creating a leaner, better company so that the stock price goes up, so I make more money. So I can see a company that's like being run badly, and go in with lots of money, change the direction of that company if I have a lot of money, and get rid of it. And there are there are people that ride these waves with companies that go in with these people and will make money on companies. They'll see an opportunity where a company is either undervalued or overvalued, and they can go in they can see what these major investors are doing. Usually these are people who come in and, they're called, turnaround. They were big, very big in the 1990s and 1980s and early 2000s. Now, there are hedge fund managers and things like that do these things, but they'll go in and buy a company. They'll get rid of all the senior management. They'll get rid of certain things that the company is doing. They'll make the company, and all of a sudden, this company stock price will go up because the company is doing or being perceived to be much leaner and have more money on its books. Like, all companies keep money. Besides the fact that they make money, and they're manufacturing, and a lot of the times they reinvest in their own companies, they also keep their profits for acquisitions, for a day when the market things turn down. So a lot of them have money kept in banks and investments and so on that they make as a company. A lot of companies invest in other companies. It's a very incestuous world, the corporate world. A lot of people who sit on boards of corporations are from other corporations, so that they know each other. A lot of these CEOs, they play golf together, they go away together, they talk about business together. A lot of the business is done, very socially. And so you need to be aware of these things, aware of how stocks, rise and fall. What makes a stock rise and fall? I'm not talking about the stock market itself. The stock market is all types of influences that neither you and I can control. A lot of times it has to do with world prices and politics and weather and all kinds of things that, are out of our control. But individual companies, how they rise and fall, a lot of times you can read the tea leaves, like a soothsayer does, by looking at the tea leaves after you drink a cup of tea. The tea leaves spell out. You could read those tea leaves, and you could see a pattern with companies. They're not necessarily obvious patterns. It's more instinctual patterns. Sometimes it's patterns that a lot of people cheat with. A lot of people say, "Oh, I'm a great." A lot of people get what's called insider information. They know what a company is about to do or not do. They know the regulations that might be lifted off of a company. I'm talking about government officials who make money. And I'm not pointing out any particular person or party. I'm just saying that especially today, much more, listen, there's always, and I say this with certainty, going back thousands of years, there's always been extreme corruption in politics. And it's not something that we've ever been able. We call it out. We try to, but it really is like almost the nature of the beast. That politics, once you're in a position of power and you have the ability to influence things, that a lot of these people try to benefit themselves and benefit their friends and family in order to stay in power. And so a lot of these politicians one of whom just, recently, I'm not even going to say, was seen to have done insider trading for many, many years and went from, having less than $1 million when they started to having, over $250 million towards the end of their career. But there are others. There are others. There are others that, benefit, and this is all through stocks. This is all because they were given what's called insider information, which is illegal. 100%. If you receive insider information or you benefit from insider information, go to jail. You're supposed to go to jail for that. Why don't these politicians go to jail? You're asking Professor Goldstein. I have no idea. I think they become much too embedded. I think so many people are so corrupt that they don't want to call out the corruption in others because they themselves will get their fingers pointed at themselves, or they'll get destroyed. The corruption is so powerful when it comes to the stocks that these individuals get, and I see it all the time. I see these people. They're actually, as I said, there are apps and websites that follow these politicians in terms of what stocks they're buying and how they're buying them and so forth. Usually they're a little too late because the it's already happened. In other words, if I'm buying a stock one day and the stock goes up and then I sell it within like an hour, it's usually too late for someone else to follow. But a lot of these day traders follow them very, very carefully, and they make the same trades that they make. So if the politician is benefiting from their insider knowledge, hopefully the day trader is benefiting from, these are, day traders are everybody. You and I can be a day trader. They're benefiting from watching what the politician is doing so that they can benefit from it also. It's a very strange thing. I don't believe, listen, have I ever gotten insider information? No. Have I picked up certain signals that people are doing and saying that make me feel that a company is going to do well or not do well? Yes. I think we all do that, and that's different. That's different than insider trading. That's why I think if someone like Warren Buffett, who's this major investor, what he says is really the best formula, and I really believe this too, is to be as educated as you can about the company that you're purchasing or not. So you're not going to know everything about the company. You can't, nor should you. And I don't know if he does either, but he does get a good sense of how much money they have, where they are, what their products are doing, how the management is doing, he's able to influence these companies, but he buys these stocks and then he holds on to them for quite some time. He's not someone who buys and sells very quickly. He usually buys, and he has a wide-ranging portfolio, and he keeps under his company, Berkshire Hathaway, that he buys and sells with. And you can buy stock in Berkshire Hathaway. I think a share of stock in Berkshire Hathaway has got to be over 20,000 now or something like that. He has winners and he has losers, but he oftentimes has more winners than losers over the years has been able to turn that into billions of dollars, not only for himself, but for those people who invest with him. He's been able to make a pretty good rate of return for those people who have invested with him over time. Now he's retiring from investing now, and he has other people who he has trained who are going to be running his company for him. But he's someone everyone has always looked to as this is how you invest in the stock market. Like someone, you look to a Warren Buffett. But there are lots of other people that you look to, and you should gather as much information as you can. And you should read, this like Stock Market for Dummies is a great start. It's a great way to read a book, and it explains things very simply for you, so that you don't. A lot of times they make up names and words, and they have all kinds of things to kind of obfuscate and hide what they do, because it makes it more challenging for the average individual. It used to be a lot easier because there was no internet, and people had to invest on their own through brokers, and they were very lost, and they relied on the broker for information. Now a lot of people are able to cull their own information from the internet. They're able to gather their own ideas about companies, and they're also able to see very quickly, how a company is doing or not doing. Where in the past they were able to you had to go to the library to look up what a company was doing, or you had to call your broker. You didn't really, or you had to look, skim the newspapers, the Wall Street Journal. Now you get on Google and you're there, and you can see what that company is doing. You go to their website, you can read about what other people are saying about it. You can read about what employees are saying about it. You can read about what other shareholders are saying about it. So you get an understanding of that company very, very quickly just by reading all these different opinions. Then you can formulate your own opinion. And that's always a great way to do things. Read other people's opinions, and read the actual research yourself, and then you come up with your own opinion. You don't have to listen to anybody else. You kind of listen to all sides. You read what yourself, what the company is doing. Do that with everything in life. Do that with politics. Do that with buying an air conditioner. Do that with how to take care of your pet. Read all these things, or read all these different things, but don't rely on any single thing, one thing. Come up with your own ideas, and read those things to inform yourself, but not to totally influence you, because you're going to have to be the one who actually puts down the money on the stock yourself when you invest. And the winnings and losings on the stock market are really going to be ultimately you. Nobody else is in the room with you. It's you and your hard-earned money that you're investing, and it's very important that you understand what you're investing in before you actually invest. So that's what I want from you. I need now. When's it due? So you have your paper due December the 1st, and so I figure today is Monday. I'll give you till Monday of next week to give me a little 2-3 paragraphs about the company that you are investing in and following on the stock market. Just give me some information that you've gleaned from the internet. It could be anything you want. Just tell me a little bit about the company so I know that you have actually looked at it. Tell me the stock price. Tell me what the company's doing. Tell me who the company's CEO is. Tell me what's going on with the company. That's your kind of a fun thing to do, not hard. I don't want you to go deep into the company. Just kind of give me a general glazed over, hey, this is who Coca-Cola is. They're a soft drink company. They're out of Atlanta. They rely on a formula. They own soft drinks. They own snack food. They own this. They own that. This is what the stock is going for. This is who the CEO is. Blah 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 blah. That's it. Okay. Have a great day. I'm going to post this right now, and I will talk to you guys later this week, and I'll be emailing all the people who've been emailing me back.